Good morning, and thank you for joining us today on our webinar on the accounting of digital assets. I'm Thalem Pillay, I'm a director in our risk advisory department, and taking us through the accounting of digital assets today is our audit director, Michael Steenkamp, who leads our technical accounting advisory side of the business. Morning, Mike. How are you doing today?
Good morning, Thalem. Yeah, very well in yourself. Thank you. Yeah,
Good,
we're looking forward to this.
That's good. I think just before we go on, I just want to make a very quick update just in terms of maybe where we are from a digital assets perspective in South Africa. So as of the 19th of October, the Financial Sector Conduct Authority has published in a government gazette that crypto assets are to be treated as a financial product within South Africa. So what they've done is they've actually defined crypto assets as a digital representation of value, and that means that it can be traded, stored electronically for the purposes of payment, investment, or other forms of utility, according to the announcement. So it's actually quite historic in that this is the first step that as sort of from a legal standpoint has been taken from a South African regulation standpoint. So this is coming at quite a good time from a webinar perspective in terms of us just trying to understand how we would account for it should these type of digital assets move into treasury portfolios, asset portfolios of companies. So Michael, over to you.
Thanks very much, Thalem. Yeah, so thanks for that update. As I will mention in my presentation as well, things are changing quite rapidly, and that we need to pay attention to those changes. And what I'm going to deal with is really the thought process to follow when assessing the type of asset that you have, and how to account for it, as opposed to giving a strict rule as to say it is this or it is not this. So hopefully that will give some guidance, and you'll see. So and with the change that's come out now this week, maybe that will change the accounting. So let's go through it step by step. So firstly, just a little bit of an introduction. So currently, as we're standing now, there is no accounting standard that specifically deals with digital assets or cryptocurrencies. The accounting issues relating to these are very, very vast and very wide, and they're also very, very dependent on a specific facts and circumstances. So what is the situation? What type of digital asset is it? And all of them have different characteristics. The literature available as we speak now, as we said, has, from when we prepared these slides 2 days ago, have changed. So it's very important that you consult on these with your IFRS advisors when facing these accounting issues. So if something has changed or something has been updated, it's best to discuss it and make sure that we're not relying on old data or old guidance, and that we apply the most up-to-date information available. Just a bit of a background. So the IASB, which is the International Accounting Standards Board, identified digital assets way back 7 years ago now, in 2015, as a potential new topic. What they then did in 2018 was they said to the Interpretation Committee that they were to consider providing guidance on accounting for different digital assets. What happened then? 2019, the Interpretation Committee issued what we refer to as an agenda decision, which was titled Holding of Cryptocurrencies. And what they pretty much said was, if it is held in the ordinary course of your business, then that should be treated as inventory. And then if not, and therefore not in terms of IS2, it should be accounted for in terms of IS38, which is the intangible assets standard. So this is, like I previously mentioned, it's continuously changing topic. So therefore, it's very important that to understand that there might not be any definitive answer for these types of assets currently, and that we should be consulting on these. So before we get into the meat of what the presentation is about today, please, if you have any questions, drop them in the chat. We might not have time to answer them during the course of the presentation because it is only for half an hour. But what we'll definitely do is we'll get those questions, and we'll get the email response through to you. So if you have any questions, please feel free to contact us afterwards or leave a message in the chat, and we'll respond to those questions. So when we're looking at digital assets, we've pretty much gone and divided them into what we call subcategories. So there's 4 different subcategories that we're going to look at. The first one, which is the one that we're all aware of and the one we hear about the most, and that is cryptocurrencies. So those are the currency now that they store that is alternative to the normal currencies that we're aware of, and the ones that we all know is Bitcoin, which is the most famous one, and there's Ethereum, and there's Ripple, and all those kinds of things. They have no inherent value, but the value is based and determined in the markets on supply and demand. So they're very volatile. They go up and down, all depending on supply and demand. The others then are referred to as tokens. So the first type of token is an asset-based token. So these are represented by commodity, gold, oil, those kinds of things, and they're specifically attached to a specific asset, and they're backed by the value is backed by that underlying asset. A utility token, that is a token that is generally created for a specific purpose or a specific service. Think of like a distributed storage kind of thing. An interesting one is Golem, which is a token that was set up and that aims to power to aggregate the power of smartphones into a supercomputer that anyone can use to run computations in exchange for these tokens. So that's very interesting. And that then is obviously the value of that is based on the demand for that specific service or product. Then lastly is security tokens. These are tokens that represent a new or existing security, and that's trade peer-to-peer from one person to the other without any bank or financial institution or something in the middle. And those are your privatized token, like your equity funds and like blockchain capital and those kinds of things. So in defining those different subsets, what we're going to go now is we're going to split them up into how do we account for these. And we split the presentation into first dealing with cryptocurrencies, because that is a recognition on its own, and then we'll deal with the tokens after that. So this specific slide might very well now be different based on what Dylan just told us in the intro as to what's happened up until from this week, so the 19th, and the announcement that was made. So firstly, do we look at, so now what we're going to go through is different sections in the IFRS standards and think to ourselves, how should we be applying those standards to cryptocurrency? So the first one that everybody thinks, is it a cash or is it a currency? So currently IFRS does not provide any definition of what cash or currency is, but IAS 32, which is the financial instrument standard, and IAS 21, which is the foreign exchange standard, they do provide a connection between cash and currency. So especially now, more so, is judgment is specifically required when determining whether this is a cash or currency. You'll see my next point says that the common properties to cash and currency, that there's no legal tender or backed by a government, and they're not capable of setting a price for a service directly, might now change with the announcement that Dylan's made. So they might have similar characteristics to cash and currencies. So like I said in the point before, judgment would be required as to whether or not cryptocurrencies are or not cash or currencies. At the time of preparing this, we would probably think that cryptocurrencies would not be recognized as a cash or a currency. Then the next thing we go look at is whether, if it's not cash, is it any other type of financial asset? So what is a financial asset? And a financial asset is typically, though, that the holder of that asset has the rights to receive contractual rights to receive cash or another financial asset. Typically, a cryptocurrency does not have that type of contractual rights. Also, it does not provide the holder with a residual interest in an asset of an entity after deducting liabilities. So then again, we're concluding that a cryptocurrency would probably not meet the definition of what a financial asset, be that of a financial asset. So now we've gone through, it's not cash, it's not another financial asset. We move on and to try to figure out what this is. And the next thing we look at, and I think it's a pretty simple answer, but it is something that we do look at, and whether or not this is if it's PPE, but PPE is quite clear, property, plant, and equipment. So that's quite clear in IAS 16. PPE is defined as something that is tangible. So we all know that cryptocurrency is definitely not tangible. So we then so we conclude that cryptocurrencies should not be recognized as PPE. What we go on to then, and we move on to the next point, is inventory. So these are the two things that the interpretation committee came and said that there could potentially be the next 2 points. So the one is inventory. So inventory, interestingly enough, in terms of IS2, everybody thinks of inventory as being stock in a big warehouse or something like that we go physically count. But inventory does not, IS2, sorry, does not require inventory to be of a physical form, but rather that it should be held, that it should be an asset that is held in the ordinary course of business. So if an entity holds cryptocurrencies in its ordinary course of business and actively trades in cryptocurrencies, then IS2 might be appropriate to account for these. So think of your currency traders and all these brokers and that kind of thing. So if they are actively, and that is their business, is not to hold these for the long-term investment purposes, but to trade these regularly, and that is what their business, and the gains from those is what they're recognizing as their revenue, is those could potentially be recognized as inventory. So if they're not held for long-term purposes, then if they are held for purposes of long-term investment, then typically those will not then be recognized as inventory. So then what is left? We look at we go through the standards, and the only one that is left is intangible assets. So if cryptocurrencies do not meet the definition of cash, PPE, or other financial assets or inventory, we most likely will have to be accounting for these cryptocurrencies in terms of IS38 as an intangible asset on your balance sheet. So with that comes its own issues, useful life, those kinds of things, amortization, impairment tests, and those kinds of things. So the last default standard that is left would be an intangible asset, and that's how you would recognize those cryptocurrencies. So now we've dealt with cryptocurrencies, and what we're going to move on to next is how we account for the other digital assets, and those being the tokens that we spoke about. The thought processes in a lot of the cases is similar, but there is some distinction to be made. So going through that, we're going to look at cash. We're going to start the same process, and we're going to follow the same thought logic, and we're going to go through each one. So again, cash or currency, similar to as was discussed previously, it's unlikely at this stage when preparing this that it would be a cash or a currency in terms of IFRS. But remember now the changes that this has been legalized, and it is a recognized form of financial item that that recognition could potentially change. Again, then we move on to financial assets other than cash. So certain tokens that are issued do give the holder a right to cash or another financial asset, potentially based on like I said in the beginning, it's very important to understand the type of item that we're dealing with, or the type of token we're dealing with, because all of them have different characteristics. So potentially some could provide the rights to meet the definition of financial asset to the holder, but it needs to be determined, which is the trick, as to whether or not these are legally enforceable. So are your rights to receive cash or another financial asset legally enforceable? So that's one of the characteristics to be a financial asset. If not, then it wouldn't be a financial asset. So only those tokens that provide the holder with the right to cash or other financial assets, if it provides those rights, like I said, is it a financial asset? If not, then it would not be a financial asset. PPE, I'm not going to spend too much time on that. Same as discussed. Although referring to a token, it's not the token that we get at the arcade. It's digital. It's not tangible. So it definitely would not be PPE. Then we go on to inventory. Again, same as discussion as previously, whether if that is held for trading and it is actively trading in digital assets and tokens and that kind of thing, and it's your ordinary course of business, and that's what you do as a business, then it would be quite reasonable to expect those to be recognized as inventory. If not, and those are held for long term, you can't recognize those as inventory because they're not held in ordinary course of business. Intangible assets, then again, default, if they don't meet any of those definitions, we could then potentially probably be defaulted into those being recognized as intangible assets. And another two categories that we're going to get thrown into on how to account for these. The firstly is this token, should this token be treated as a prepayment? So this is different to cryptocurrency. This assessment wasn't under the cryptocurrency section, but is applicable to tokens. So some crypto tokens could very well give the holder a right to a future good or service. Again, based on the characteristics and those cryptocurrencies, they might very well give the holder the right to a future good or service. So if the token is a prepayment for future, then the token would be a prepayment for future goods services. Then it might be very well treated as such. If the prepayment does not meet the definition of a tangible asset, so therefore it's not an intangible asset, the token would be accounted for like any other prepayment that we're currently aware of. So there is an interesting fact. So again, circumstances, facts, what is the token for? Does it give you a right to a future good or service? If so, it could very well potentially be accounted for as a prepayment. The next thing we're going to look at is whether or not these tokens should be treated and accounted for based on the underlying asset that token relates to. So certain tokens, again, I keep sounding like I'm a broken record, but again, I'm saying the facts and circumstances are very, very important. And they're not just generic, because certain tokens give the asset of the holder an interest in an underlying asset. And these could be commodities, like I said, your gold or your oils, or it could be another intangible asset, or it could be artwork, it could be property, whatever that token gives you an interest in, potentially could be, it needs to be assessed. So some tokens provide you with an actual claim on the actual asset, being whatever the asset might be, or it just there's no ability to redeem the actual asset, but rather it gives you cash based on the value of the underlying assets. So where where the asset in it, where the token provides you with a claim in the asset itself, then you might very well treat the token as in the same way as you would treat the underlying asset. If you are if the token gives you the right to receive cash based on the value of the underlying asset, you might then meet the definition of a financial asset and be treated as a financial asset under the financial instrument standard. So very, very important to understand the distinction that we have here between what value are you getting. So are you getting, it's critical to determine whether you're getting a claim to the actual asset or whether you're getting cash based on the actual value of the asset that's changing. So the accounting for these are very, very different. The one way would be treated exactly the same way or similar way to the actual underlying asset that you have an interest in. The other way would be treated as a financial asset. It's totally different in terms of the financial instrument standard. So it's very, very important to make that distinction of what we actually dealing with. So then going through these and understanding and applying those different categories to the different tokens that we've spoken about is what we're going to do now. So obviously in the beginning, we mentioned we had asset-based tokens, we've got utility tokens, we've got security code tokens. So in understanding those different tokens, how do we apply the discussion we've just had previously to what we've just to the different types of tokens? So an asset-based token, I think, is quite understandable. So again, if it provides the holder with the right to the underlying asset, then you would account for that to in a similar way to the underlying asset that you have, be it property, plant, equipment, be it an intangible asset, be it whatever type of asset that you're holding. A utility token, so that normally these types of tokens provide the holder for a right to a future good and service, which is a prepayment. So if that prepayment meets the definition of an intangible asset, then you should account for it as such. If not, then you should account for it as you would any other prepayment. Then to the security token. So a security token could give you the holder rights to cash based on the platform's future profits or residual interest in the net asset. So again, you have a right again that talks to being a financial asset. So if a contractual right to cash or other financial asset could exist, then these tokens would therefore meet the definition of a financial asset and would be accounted for in accordance with IS9. So as you can see, we've gone through all four different types of subcategories that we've had. We've spoken about cryptocurrencies, which would be treated for under which could probably and will most likely be accounted for under IS2 or IS38, which is inventory or intangible assets. We've gone through the different tokens, and asset-based tokens would probably be treated under the standard which the underlying asset falls. We've spoken about utility tokens, which would probably be a prepayment, or we've spoken about now security tokens, which would be treated for under IFRS 9, which is the financial instrument standard. So as you can see, all four different subcategories are treated in a different way. So it's very, very, very important to understand what the characteristics are of the digital assets that you have, and applying the thought process to those specific circumstances and facts. Like I said, this is in the beginning, and Phil has mentioned that just this week we've had changes to this and how these are accounted for or recognized and seen in the markets, and whether they're legalized or not. And it's very important that you consult with your financial advisor, with whoever your IFRS advisor is, on understanding these if you hold them, so that we can get the right accounting upfront, rather than just following a general guidance or general principles. That brings us to the end of the presentation. We are 5 minutes early, so if there are any questions, we might be able to answer them now. So I'm just going to hand over to Philin. Philin, if you want to just have a quick wrap up, and I know we've had previous webinars on this. So yeah, bringing it all together. Thanks very much.
Thanks, Mike. I think just what I wanted to say to everybody is, just as you've indicated, the use case here is very important. So, the whole I suppose debate about substance over form, and the actual substance of the transactions in terms of how you are going to be utilizing these assets is going to come into play in terms of the treatment. So it's very important that you do seek out professional advice if you are going to be bringing onto your company's books in the form of maybe financial instruments on the asset side, or potentially looking to augment the treasury portfolio side of the business. The other thing I just want to mention to everyone is that we have quite a lot of podcasts so far that are put out in terms of our digital asset series. So I do encourage you to actually go and have a listen to those. We are going to be bringing future webinars and articles in the series, particularly around the recent update and publication by the FSCA in terms of it being recognized as a financial product in South Africa. So thank you everybody for joining us today. And if you have any questions or comments, please feel free to drop us an email either today or whenever you see fit, and we will respond to you accordingly.